Well, I would say this. I wouldn't say all institutions buying is a bad thing. That's not what I meant. What I said is that like ETFs in and of themselves are antithetical to Bitcoin because the whole point of Bitcoin was owning your own keys, right? Like if you're just gonna go buy an ETF, that's not really the point of Bitcoin. That's antithetical to Bitcoin. Now,
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. One of Cowen's strongest points is that Bitcoin and the broader altcoin market should no longer be viewed as the same thing. While he remains bullish on Bitcoin long term, he argues that the altcoin ecosystem has largely become dominated by froth, grifters, and scams. According to Cowen, many altcoins today lack meaningful utility, sustainable adoption, or real-world use cases. To explain this, he compares crypto with artificial intelligence. AI, he says, has been operating under the same restrictive macroeconomic environment and monetary policy conditions as crypto. Yet AI companies and technologies have continued to thrive because they provide genuine utility and solve real problems. Crypto, on the other hand, has struggled because much of the market became centered around speculation rather than innovation. Cowen believes this shift discouraged serious developers from remaining in the space. During the latest cycle, developers building meaningful products often received little attention or funding, while meme coin creators generated enormous profits almost overnight. As a result, many talented builders moved into AI, where their skills and innovations were more appreciated.
time probably actually useful. I mean, I think to some degree, to speak frankly, I think that politicians and influencers essentially just exposed the asset class for what it had become. I think before that, there was still this like thinking of, oh no, like let's just ignore the meme coins, like they're always going to be there, but it doesn't really represent crypto. It's, you know, crypto and Bitcoin are not necessarily the same thing. But then when you have politicians coming in, and even the president of the United States, like I know like anyone who criticizes anything that politicians do, like you just get tons of haters, you know, all over you. But the reality is, like, it shouldn't be okay for a president to launch a meme coin and then for it to drop like 90 something percent, and then for us to just like forget about it and then act like it's normal. Like, that's not a normal thing for presidents to do. And I think essentially what happened is he saw the crypto industry for what it was like, and you know, he used to be very against Bitcoin and crypto. If you think back like 5 or 6 years ago, and I don't think he magically just started like liking crypto. I think he realized that if he became sort of on the outside supportive of crypto, he could then use that as a disguise to then essentially just loot the industry. I really don't understand why at some of the major conferences they give these people these platforms to talk about this stuff, because it's not what Bitcoin was about. And I know like I get a lot of hate for saying this, but Bitcoin, like ETFs and governments getting involved in Bitcoin is antithetical to Bitcoin. Like it's not why Bitcoin was created. But I think what's happened is that people like politicians and you know, and just a lot of influencers and whoever else, a lot of people in power just realize that if they pretend to like crypto and Bitcoin, they can then get rich by creating other instruments to drain liquidity out of the asset class. Because the reality is, you know, AI had to deal with the same monetary policy that crypto has, but yet AI has done incredibly well the last few years. And what the reason is because there's actually a use case. There's actually a use case for it. For crypto, the use cases for it, especially the altcoin market, is practically non-existent. I'm not saying there aren't some niche cases, like there are. Long term, I'm still very bullish on Bitcoin, but the altcoin market has turned into, you know, a space just filled with froth and grifters and scams, and that's essentially like, for the most part, that's what it became. But it wasn't all. I don't think it was always like that. I think there used to be people that actually were trying to develop something, but then the developers were never rewarded, right? The people that were rewarded this past cycle were just the people launching meme coins, because anyone actually trying to build something useful, no one cared about their projects because they weren't meme coins. And so those developers, a lot of them left crypto to go to AI, where their skills, I think, would be more appreciated. And I think the only way we're going to get back to how things used to be is just to go through the brutal cycle that we're going through now, right? Like, and a lot of people are so worried about Bitcoin could rally back to 90K or 100K, and people still aren't going to come back because we already rallied to 126K and retail never showed up. So it's going to take, I think it's going to take a lot of time. Probably people developing an actual use case for some of these cryptocurrencies. And, you know, I think that's one of the huge benefits of times like this, because a lot of the garbage does die, and then it allows the industry to focus on what actually matters.
Talking about the conferences that you were mentioning, our colleagues were just now in Las Vegas for Bitcoin 2026, and there was a lot of excitement around institutional involvement into Bitcoin. We had a couple of guests on, like Matt Hoogan from Bitwise and Eric Balchunas. They were basically saying that all the money that is coming into Bitcoin through ETFs is actually the catalyst, is potentially the catalyst that will bring it back to its all-time highs and beyond.
Well, I would say this. I wouldn't say all institutions buying is a bad thing. That's not what I meant. What I said is that, like, ETFs in and of themselves are antithetical to Bitcoin, because the whole point of Bitcoin was owning your own keys, right? Like, if you're just gonna go buy an ETF, that's not really the point of Bitcoin. That's antithetical to Bitcoin. Now, institutions buying Bitcoin, if they're not buying it through the ETF, I think it's fine. And I'm not going to pretend like ETFs are a terrible thing. I buy ETFs. I just don't buy Bitcoin through ETFs, because the bull case for Bitcoin was that you own the keys to your Bitcoin. The reason why I push back against the ETF narrative, there's two reasons. Reason number one is that narrative was the same reason given for why the bear market wouldn't happen in the first place, and we still dropped 50% despite the ETFs. And then the second reason, in 1999, the QQQ was launched, and that was a tech-based ETF, and it was at sort of the tail end of this, you know, multi-year bull market. And when the QQQ was launched, it actually launched at 48, and then it rallied up to 120 before going into, you know, a bear market where it went all the way back down. And so ETFs are not always the savior to an asset. In fact, the reverse is more likely to be true, and that is that thematic ETFs are often launched near the end of bull markets. And the reason is because it takes massive bull markets for people to have the motivation and ambition to launch the thematic ETF in the first place.
Although I would think that people that are extremely bullish on ETFs are talking about the more long-term perspective beyond a single bull and bear cycle.
I could agree with that in the longer term, but in the short term, they're not going to have any major impact on price, in my opinion.
There was not long ago the last meeting led by Jerome Powell that now will be replaced, and a lot of people were waiting for this moment because they expect the next Fed chair to cut rates and so on. But you disagree? You think that this change in the leadership on the Fed is a bad thing for the markets?
Yeah, because I think Powell did a really good job of communicating. They're not perfect, and honestly, I think if you gave me the choice to whether we should have the Fed or we should end the Fed, I would say just end the Fed. You know, like, in the Fed. I don't think that they necessarily need to be here. But if you gave me the choice between having an independent Fed versus a Fed that's literally just basically another cabinet of the executive branch, that seems scary. Because what it seems like to me is that they want to ignore what's going on in the macro to justify short-term money printing, which would lead to inflation again. But why worry about inflation when that'll just be someone else's problem? And I think that is a scary part. And look, the Powell got a lot of criticism, and some of it was deserved. Like, the inflation is transitory. You know, I think they missed that by a lot. He still raised rates despite the fact that they weren't wanting him to do it. But it didn't lead to the rhetoric that occurred in this administration where they're going after them legally, and I think the reason they're making reasons up, but the real reason is they wanted him to lower rates. So I think there's a concern here that over the next couple of years, if they continue to go down this road, then eventually the Federal Reserve will be very much politically motivated. And I think that a lot of people would lose confidence in the institution itself.
Just to close the conversation, I have just a fun question very quickly. So you have been posting a lot about science lately, and you steered a lot of replies from your audience, and you came to the conclusion that shitcoiners are anti-science. Can you tell us how you came to this conclusion?
I would say not all shitcoiners are anti-science. But what I found was that a lot of the same people in my replies that told me I was a moron for the last 4 years for telling people to fade alt season and that there wouldn't be an alt season, the same guys were in my replies telling me the moon landings were fake and the earth is flat and Artemis 2 didn't even happen. I literally saw Artemis 2 go up with my own eyes. Like, I was in Florida watching it go up, and then I go on Twitter and I see these guys saying that it's fake. Like, it's just, and then it puts things into perspective, right? The people that say the moon landings are fake are the same people that'll launch meme coins and say they're going to the moon. And I'm like, I thought there was some irony in the moon boy degens are the same guys that often will say that we didn't actually go to the moon. And I was like, you know what? Is it a coincidence here that the people that have a hard time believing in what's actually going on with humanity and what's a really cool thing are the same people that want you to believe, like the people that don't believe that are the same people that want you to believe why their meme coin is a good thing. And so I think that it shows you that people are motivated by their own self-interest.
Yeah, my guess is that a lot of times altcoins are just, this sort of sects, almost like a religious sect. You believe in your shitcoin so strongly, you don't believe in anything else except that your shitcoin is going to the moon because you put all your hopes in that.
You're incentivized to want it. And by the way, there's a saying that misery loves company. I think a lot of people are miserable because they did put a lot of money into altcoins, and those altcoins went nowhere for the last 5 years. And now they're just very pessimistic about things.
Another major topic was Bitcoin ETFs and institutional involvement. Cowen clarifies that he is not entirely against institutions buying Bitcoin. However, he argues that Bitcoin ETFs are fundamentally contrary to Bitcoin's original philosophy. The entire purpose of Bitcoin, according to Cowen, was financial sovereignty, owning your own keys and controlling your own money without relying on intermediaries. Buying Bitcoin through an ETF removes that core principle because investors no longer directly hold the asset. He also pushes back against the popular narrative that ETFs alone will endlessly drive Bitcoin higher. To support this argument, Cowen references historical examples, such as the launch of the QQQ technology ETF during the dot-com bubble. The ETF launched near the end of a massive bull market, rallied further, and then suffered a severe bear market collapse. His point is that thematic ETFs often emerge late in bull cycles, not at the beginning. They are typically created after strong market momentum already exists. Therefore, while ETFs may support Bitcoin adoption over the long term, Cowen believes they are unlikely to prevent major corrections or guarantee immediate upside in the short term.
So if you look here, this is Bitcoin in 2026, this orange line, compared to the average of prior midterm years, with one standard deviation shown. So if the midterm year view is to be correct, then I wouldn't really expect it to go too much higher than where Bitcoin has already gone. It could always theoretically go to like the 200-day or something, which it historically does tag at some point in bear markets. Like, Bitcoin will often tag that level. You can see it tagged it here in April of 2022 and in May of 2018 and in June of 2014. So it's not like it's impossible for Bitcoin to, to tag the 200-day SMA at some point. But some of the metrics that I'm looking at to sort of back up why we could still go lower is some of the more like cyclical indicators, I guess. So year-to-date ROI in midterm years, it looks like it generally goes lower as the year goes on. And oftentimes we have these rallies, right? And even in 2018, we had this rally, almost the exact same rally, in fact, in 2018. See, in 2018, we had a low in February and then a higher low in April. Same thing, right? A low in February, a higher low in April. And then we rallied on up, and then we found a top in early May. And, we're kind of seeing something potentially happen once again like that. And if you zoom in to what happened back then, Bitcoin had a rally, and then it sold off a few days before the FOMC meeting. Back then, the FOMC meeting was on May 1st to May 2nd. And then we had a rally that lasted a few days going into the sort of the first week of May, and then it marked that high, and then we sold off into June. So that's what I would be looking for as kind of like confirmation, is putting in a lower high relatively early on in May. In 2014, it did take until June to find that lower high, but I tend to think it's probably going to happen a little bit earlier than June. I think May is more likely going to be sort of a local high for Bitcoin. And then to find that weakness going into June, you can also see we had a low in June of 2022 as well. So June of 2022, you also have that low in June of 2018. I think you'll see something similar happen in June of 2026. And then the other thing to look at beyond the year-to-date ROI is if you look at the ROI from the low for Bitcoin, what you'll notice is that this last cycle topped on day 1062. And the cycle before that topped on day 1059. And the cycle before that topped on day 1068. So they all topped within about a week of each other. And if you extend this out to the next low, it seems like we have, potentially a few more months of bearish price action, right? So if Bitcoin does remain bearish for a few more months, I think it'd be a lot easier to then start to expect more durable upside, potentially going into 2027, assuming there's not like a recession or anything like that. If we're still trading above 60K, by the end of the year, then there's a chance that would be the low. And perhaps we just have to wait a little bit longer for the macro to sort of devolve and then allow that crisis to allow the business cycle to reset, right? Like the liquidity risk metric to reset back down to the lows, the business cycle to kind of reset back down to the lows. The problem is none of that stuff has actually happened yet.
One of the more unusual parts of the interview involved Cowen discussing conspiracy theories within crypto communities. He noticed that many people who aggressively criticized his cautious market outlook were also promoting anti-science beliefs, including claims that the moon landing was fake or that the Earth is flat. Cowen found irony in the fact that some moon boys, people constantly claiming their meme coins are going to the moon, simultaneously deny that humanity ever went to the moon. His broader observation is psychological. He believes many speculative crypto communities begin to resemble ideological or religious groups where people become emotionally attached to their coins regardless of evidence or reality. According to Cowen, investors who put large amounts of money into failing altcoins often become trapped in denial and seek validation from others who share the same beliefs. This creates echo chambers where hype replaces rational analysis.